There is one word on a bank form that decides who gets your money when you die, and it can quietly override everything written in your will. I typed that word into a computer several hundred times over the years for people I liked, and not once did anybody explain to them what they were agreeing to. My name is Harold Briggs, 43 years behind a bank counter, and today I'm going to show you what that word does, and the two things you should ask for instead. The conversation always went about the same way, and I could see it coming across the lobby. A woman in her late 70s comes in with her daughter. The daughter has driven over, and the mother says something like, "I'd like to put Karen on the account. She does my shopping, and she needs to be able to pay things for me." And the daughter looks slightly embarrassed, the way good children do when they're doing something helpful that feels like taking over. And I would say, of course we can do that. And I'd pull up the form, and there is a box on that form, and the box says joint owner. And I'd tick it, and both of them would sign, and I'd hand them a folder, and we would all have a pleasant chat about the weather, and off they'd go. And what had actually just happened in law is that half of that woman's money now belonged to her daughter. Not when she died. That afternoon, standing at my counter. Now Karen almost certainly didn't want it and would have been horrified to be told she'd been given it. That is not what either of them thought they were doing. They thought they were arranging some help with the shopping. But the bank form does not have a box for help with the shopping. It has a box for joint owner. And that is what got ticked, because that is the box that was in front of me. So today, what being a joint owner actually means and why it starts immediately. The three ways that goes wrong. And the second one is the one that splits families for good. The two proper tools for the two things people are actually trying to do. And the one thing to ask for at the counter that hardly anybody knows exists, including for a long time me. And at the end, the same problem applied to something much bigger than a bank account, which is your house. Two thoughts before we start. The first, Harold, my children are good people. This is not about them. I know. I'd like you to hear that clearly, because this is not a video about greedy children, and I'm not going to make it into one. Almost everything I'm about to describe happens to families where nobody did anything wrong at all. And the second thought, Harold, I've already done it. Good, stay, because most of this can be undone in an afternoon, and knowing which of the three problems applies to you is the whole job. So let's start with what the word means. When your child becomes a joint owner of your account, they own the money, fully, today. It is not a promise about later, and it is not a permission slip. Legally, in most arrangements of this kind, each owner may take the whole balance out at any time without asking the other. That is not a loophole. That is what the arrangement is for. It's designed for two people who genuinely share money, like a married couple, and it works very well for that. The trouble is that it gets used for something else entirely, an elderly parent who wants help, and a bank form that only offers the sharing option. Problem one. It is now exposed to everything in your child's life. Because that money is legally theirs, it can be reached by the things that reach them. If your son is sued, that account can be part of the picture. If he owes a debt and a judgment is entered against him, that account is not obviously your money anymore. And if your daughter goes through a divorce, that balance can end up being argued about in a room full of lawyers who have never met you. Now I want to be careful here, because these situations do get sorted out sometimes, and there are ways of proving where money actually came from. But understand what I'm describing. Your life savings becoming a thing that has to be argued about by other people, possibly while you are still alive and living on it. Even winning that argument is a horrible year. Quick pause. My ebook, You Earned It Twice, gives you 52 plain English calls to lower bills and avoid costly mistakes after 65. It's the first link in the description. Now, problem two, and this is the one I most want you to hear, because it is the one that does permanent damage to families. When you die, that account does not go through your will. It goes to the surviving owner, automatically, by the simple fact of the arrangement. Your will can say whatever you like. Your will can say, in careful legal English, that everything is to be divided equally among my three children. That instruction does not reach this account. The account is already spoken for, so picture the family. 3 grown children. One of them lives nearby and does the shopping and the doctor's appointments, and years ago her name went on the account so she could pay for things. And the other 2 live 2 states away and love their mother perfectly well and visit at Christmas. Mother dies. The will says divide everything equally. The house does, the car does, and the bank account, which after a lifetime of careful saving is very often the largest thing in the estate, goes entirely to the daughter who did the shopping. Now, what happens next depends entirely on that daughter and on her brothers and on how much they can absorb. Sometimes she writes 2 checks immediately and nobody ever mentions it again. And I saw that happen and it did her enormous credit. And sometimes she doesn't, because she has spent 11 years driving her mother to appointments while the other 2 rang at Christmas. And she has some feelings about that which she has never once said out loud. And sometimes she offers and they refuse, and it's still never right again. And here is what makes me sad about it. That mother did not choose that. She was not making a decision about her estate at my counter. She was arranging help with the shopping. But the form did not know that, and so a piece of paperwork made a decision that she would have been appalled by, and she never found out because she wasn't there for it. Problem 3. And I'll say this one plainly and briefly, because it is real and it does not need dressing up. The most common way an older person's money is taken is not by a stranger on the telephone. It is by a relative with legitimate access. That is not an accusation against your family. It is simply the reason to prefer an arrangement that leaves a trail and a limit over one that hands somebody the lot with no supervision at all. Good arrangements protect good people too, because they mean nobody ever has to be trusted blindly, and nobody ever gets wrongly suspected either. If this is useful so far, hit the like button, because somebody is standing in a branch this week about to tick that box. And subscribe. I do one of these every day. Now, before I give you the good news, I owe you an honest answer to the question you should be asking, which is, Harold, you knew all this. Why on earth didn't you say something? And the truthful answer has 3 parts, and I don't come out of it well. The first is that for a long stretch of my career, I did not know. Not properly. I knew that joint meant both names, and I could have told you that either person could withdraw, because that was in the training. What I could not have told you is that it overrides a will. That is not banking. That is a state law. And nobody at a bank is taught a state law. I found it out the way I found out most of the things on this channel, which is by watching a family come apart in front of me and then going away and reading about why. The second is that even once I did know, there was a line I was not supposed to cross. A teller or a manager giving an opinion about how a customer should structure their estate is a bank giving legal advice, and that is a genuinely serious problem for everybody, including the customer. So the honest version is that I was not permitted to say the thing that would have helped, and I want to be careful here, because that rule exists for good reasons, and I am not going to pretend it doesn't. But the third part is the one I actually think about, and it is not about rules at all. There was a queue. There is always a queue. And the mother and the daughter were happy, and the form was in front of me, and the box was right there, and saying, before you sign that, can I ask what you're actually trying to achieve, would have added 20 minutes to a Tuesday afternoon. And I did not say it. Not because anybody stopped me, because it was easier not to. That is the whole of it, really. A rule nobody is taught, a line nobody may cross, and a queue. And on the other side of the counter, 2 people who love each other, trying to sort out the shopping. Now the good part, because there are proper tools for this, and they are not difficult. Look at what people are actually trying to do when they add a child to an account. It is nearly always one of 2 things, and they are completely separate problems. 1, I need help managing my money while I'm alive. The tool for that is a durable power of attorney. That is a legal document, drawn up properly, that lets somebody act on your behalf. It gives your daughter the ability to pay your bills and deal with your bank. It does not give her the money. She is acting for you, and she has a legal duty to act in your interest, which a joint owner does not have at all. It costs something to set up, and it is worth every penny of it, and it is the single most useful document an older person can have. 2, I want this money to go to my children when I die. The tool for that is the payable on death designation I talked about in the video about probate. You name who receives the account, they get nothing while you're alive. They have no rights and no access. And on the day you die, it passes to them directly without going near a court. And you can name more than one person, which means your 3 children can be named for a third each. And the thing that broke that family cannot happen. Notice how cleanly those 2 split. Help now and passing on after. The joint account is a clumsy tool that half does both and creates a problem doing it. And now the thing to ask for at the counter. Many banks offer an arrangement, and the names vary, but ask for a convenience account, or an authorized signer, or an agent on the account. What it means is that your daughter can sign, deposit, and pay things for you, and she does not own a penny of it, and she gets nothing on your death. Access without ownership. That is exactly what most families want, and it is almost never what they end up with. And I'll tell you honestly why. Because the joint owner box is the one on the standard form, and the convenience arrangement often requires a different form that somebody has to go and find. It's not a conspiracy. It's just the path of least resistance in a busy lobby with people queuing behind you. So walk in and use the words. Say, I do not want a joint owner. I want my daughter to have signing access without ownership. If the person in front of you doesn't know what that is, ask for the manager. And if the manager doesn't know, ask them to check, because in a great many places it exists. That one sentence, said out loud, is the whole of this video. And now the house, because the same instinct does far more damage there. The reasoning is identical. My son should have the house eventually, so why don't I just put his name on the deed now and save everybody the bother later? And people do it, and there is often a nursing home somewhere in the thinking, and I want to walk through why it so often goes wrong. The first reason is tax, and it is a big one, and almost nobody knows it. Under the rules as they stand, when a house passes to your children after your death, its value for tax purposes is generally reset to what it is worth on that day. So if you bought it decades ago for very little and it is worth a great deal now, that entire increase can effectively disappear for tax purposes when they inherit. But if you put their name on it while you are alive, you are giving it to them rather than leaving it to them, and that reset can be lost, which means that when they eventually sell, they can face a tax bill on decades of increase that would have vanished if you had simply done nothing. I have seen that number, on an ordinary house in an ordinary town, run into a great deal of money. Same house, same children, entirely different outcome, decided by which method was used. The second reason is that it is now their house too, with everything that comes with it. Their divorce, their creditors, their judgment, your home, and somebody else's legal life. And the third is that if the reasoning was to protect it from care costs, there are look-back rules that examine what you gave away in the years beforehand, and giving away a house is exactly the kind of thing they are designed to look at. So it can fail at the very thing it was done for, and cost you the tax treatment as well. There are proper ways to handle the house question, and they involve an attorney, and I am not going to pretend otherwise, or hand you a shortcut. What I want you to take from this is simply, do not do it yourself with a form off the internet on a Sunday afternoon, because it seems tidy. This is the one place where the cheap solution is genuinely the expensive one. Let me finish the story of the 3 children, because it is a real family and it has a real ending, and it is not the ending you are expecting. The daughter who had done the shopping came in about 3 weeks after the funeral, on her own, and she wanted to know whether there was any way the account could be split. And I told her the honest answer, which was that the money was legally hers entirely, and that she could do whatever she wished with it, and nobody could compel her either way. And she sat there for a while, and then she said something I have never forgotten. She said, the problem isn't the money. The problem is that if I split it now, they'll think I only did it because they found out. And that is exactly right, isn't it? That is what that little box on the form actually cost that family. Not the balance. It cost her the ability to be generous without it looking like something else. Whatever she did next, one of her brothers was always going to be able to tell himself a story about it. She could not win, and she had done absolutely nothing wrong, and neither had her mother, and neither, if I'm honest, had I. She did split it, by the way, evenly, 3 ways, within the month, and as far as I know they are all right with each other. But she carried something for a while that she should never have had to carry, and it came from a form that took 90 seconds to complete. So here's your week. 1. Find out what your accounts actually say, not what you think they say. Ring or go in and ask this exact question. On this account, is my daughter a joint owner, or an authorized signer, or a payable on death beneficiary? Those are 3 completely different answers, and most people cannot tell you which one they have. 2. If it says joint owner and what you wanted was help, go and change it. Ask for the convenience or authorized signer arrangement and add a payable on death designation naming whoever should receive it and the shares you actually want. 3. If you do not have a durable power of attorney, that is the most valuable thing on this list. Speak to an attorney about it. It is not expensive relative to what it prevents, and legal aid services can help if cost is a genuine barrier. And 4. If anybody's name is on your deed, or you have been thinking about putting one there, Speak to somebody qualified before you do anything at all. And send this to somebody. Specifically, send it to the child who is doing the helping, because they are usually the one who suggested the joint account, and they suggested it out of love, and they will be the one blamed for it later by people who are not there. Sending this to them today is a kindness to the whole family. Then leave me a comment. I want to know whether anybody at a bank has ever explained the difference between a joint owner and an authorized signer to you. Anybody. And if your family has been through the version of this with the will, tell us, because that story stops somebody else in their tracks in a way that I cannot. I read every single one. And subscribe, because next time I've got another one of these, something that cost ordinary people real money, that nobody in the building has any particular reason to mention, and that takes about an afternoon to put right. Everything I've shared today is general educational information from a retired banker. It is not legal, tax, or financial advice, and I am not an attorney. Account ownership rules, survivorship, gift and inheritance tax treatment, capital gains rules, and care cost look-back periods vary by state and by circumstance and change over time. Before adding or removing anybody from an account, and certainly before putting anybody's name on a property, please speak with a qualified attorney about your own situation. That is not me covering myself. That is just sound banking. If you want more plain-spoken banking lessons that help you protect what you earned, subscribe to the channel. Look after your money. You earned it twice. Once when you worked for it, and once when you kept it. I'll see you in the next one.